Good evening, traders. Welcome to our session today. We'll be looking at entry confirmations with Fibonacci. My name is Mathew. I'll be guiding you through this presentation. So let's get along. If you have any questions, please feel free to send it over on the chat and we'll review them. All right. So first, let's look at what a Fibonacci retracement tool is. It is just a series of numbers that create ratios which describe the natural proportions of things in the universe. So the Fibonacci retracement tool uses that sequence of numbers in predicting various occurrences in nature and even various behavior of various levels of the price changes or makes certain moves. So a Fibonacci retracement tool can help identify potential areas of price reversal. And in this presentation, we want to look at those Fibonacci retracement levels that you can use to confirm your trades. There is a very interesting story about Fibonacci and these Fibonacci retracement tools. They are naturally occurring events that are considered to follow Fibonacci retracement. For example, the staircase, the drawing of a staircase, drawing of spirals. It's even argued out that if you look at the width, the length of your, divide the length of your hands, if you're stretching them from one side to the other, and then your height, it can give you can resort to a Fibonacci retracement numbers. But apart from that, let's look at those numbers and how they can be used in predicting or in predicting the financial market moves. So how you draw the Fibonacci retracement, you first of all identify the trend. So when you have a trend, of course, you want to consider the swing high or the highest level and then the swing low of a trend, or the swing high and swing low points. Then you draw the Fibonacci retracement levels. And once you draw the levels, you're going to find percentages. And these percentages usually show pullbacks or how far the market can, let's say, take a breather before resuming the trend. So literally this is like a trend following approach, or something you can use to know when the price is just about to pull a continuation of a trend. So when you check on the screen, these are the levels you need to consider. You have levels from 0 to 100, but you can as well edit to have other levels even beyond 100, but still based on these percentages you have here. So in this case, you have 0, that 8.2%, you have 61.8%, 17.6, 100. You can add other levels if you want, but these are the most commonly used levels. If you consider this move, for example, if you are to take a move from 0 to 100%, then 50% is just the mid of that trend, and then 100% is like the top of the trend or the bottom of the trend. So when you have that 8.2, it's considered a shallow pullback. 50% is the midpoint, and then 61.8% is the golden Fibonacci ratio. Yeah, and 17.6 is more of a deep pullback, mostly might signal a change of the direction of the market. So with this, I want us to look at examples on the chart, right? If you have questions, please feel free to send them over. All right, so I'll just pull any chart. All right, so here we have NASDAQ or UT 100. So step number one, if you are on a trend, or step number one, you need to identify a trend. So once you have a trend, you want to see levels that the price pull back to, and then where you can get confirmations. Now, one thing you need to note is the Fibonacci retracement is going to confirm support levels or resistance levels where where you can find entries. You're not going to use the Fibonacci levels only, but you want to consider the candlestick patterns around that area. So you can get entries with a little bit more confirmation, just to put it that way. Now, identify the trend, then you find a swing high and swing low. In this case, let's look at the latest move which you have here. This is NASDAQ. You have one bottom, another bottom here. So for you to get a trend, you need at least 2 points to connect, all right? And for an uptrend or a swing low, you need to have 2 points where, or 2 points showing higher lows. For example, here we have a low. Let me just show you. Let me mark. Here we have a low point, right? And if you consider the move here as well, we have another low. So this one is a low, then we have a higher low. So this is a good level for you to draw an uptrend, right? And in this case, if you consider this level here, then we have a swing high as well. Let's consider a swing high. So how you get a swing high? Make sure that you get this type of a structure. There's a high, and then of course you have a lower high. So for the people who will do SMC, this is what we call, this is a pattern that shows a break of a structure, right? A change of character, sorry, change of character, where you have the price breaking to the downside. But then, because we're on a strong upward move, then we are taking it, or we are considering that this price is gonna resume the uptrend after pulling back to some level of which we see here. Now, once we've gotten this low point and the high point, then the next level is go and select the Fibonacci retracement. So if you are on a phone, you will find that Fibonacci retracement on the object section, and once you scroll to the downside, then you see that Fibonacci. If you're on the PC, on the laptop, the MT5 on the laptop, then just check on the left side, you have it there. Or still you can go to the insert, you go to the object section, let's see where we have it. You have the Fibonacci, and we want to use the Fibonacci retracement. So let's select the Fibonacci retracement. Now, this is something I need to mention as well, that if you are on the uptrend, once you get your tool, you want to draw it from the swing low to the swing high. So in this case, I want to draw it from the bottom part, right, like that point, all the way to the highest level, which you're considering the swing high, right? And in this case, let's see how the pullback came about. So the price went all the way from this low and to the highest point level. Let me put a bigger color that you can see a little bit. For this one, yeah. The price went all the way up, but then we had a pullback. Let me use an arrow to show the pullback. Go to the objects, not arrows, but on the lines section, you have the arrow. This is just for demonstration. Just from that point, the price went down to this level before resuming to the upside. So literally what you're trying to look for is this section here, where we had the price touching this level and then resumes the upward move again, right? The price resumed the upward move right from here, started moving upwards, okay? Because we believe we are on an uptrend. So in this case, these are the levels we connected. We are on an uptrend after these 2 points, right? 1 touches, 2 touches at this level, and check here. The Fibonacci from all this level to this area. So we have a pullback to this zone here. Let me mark that level as well. I will use the boxes, show them to you. This is the level we are looking for. This one, the price came and touched that point. Now I want us to identify where the levels it's pulled back to. From this level up here, it is from level from 100. If you consider down here, let me stretch from 100. You can see that 100 all the way up to this 0, and then the price literally pulled back to around 38.250%. So in this case, what you want to consider is if this price pulls back between below that 8.2 and does not go beyond 50%, right? Then you want to wait up until it rises above that 8.2 level, goes up above again that 8.2 level. And at that point, you want to consider going long. So the last resort, or the last thing you're considering before going long, is the candlestick patterns. Remember, they are the ones which are showing the behavior of the price. So we'd want to wait for the candlesticks to confirm an upward move. At that point, you have an entry, and someone could have garnered quite some points up to this level. So what is coming up here again is, since this price did not really push all the way up, because the target should be the next swing high, right? So the price did not really go there, and you can see how it went back again to 38.2%. And we have a rejection, then the price is confirming to the upside. And this is something you can as well use for your entries, all right? This is a case for an uptrend, okay? Again, if it's an uptrend, you want to pull the Fibonacci tool from the bottom to the top side, and then you can stretch it a little bit to see the levels appearing on the left. All right. That is just UT100, that is NASDAQ. And this approach will work for any instrument which you're trading. So let's check out for something else. Maybe gold. Okay, let's try gold. You want to use clean charts, and you can as well use any indicator which is showing you a trend. So in this case, we have EMA 100. There was a sell limit order here. Let me remove it. So you can as well use any time frame, but always remember a higher time frame might give you something much better, or something to ride for quite some time. So the question you ask yourself is, what is the trend? And then you identify the swing high and swing low. So in this case, if you look at this chart for gold, we are on a downtrend based on our moving average here. And if you look at the price, it's just a downtrend. For the guys who consider SMC, we've got the price breaking the lows to the downside. But yeah, whichever approach you're using is a downtrend, only that we decided to use a moving average in this case, EMA 100. Even if it was 200, it would show us this downward move. Now, the next thing is, you might not want to consider the whole trend right from the highs, or the all-time highs, or the all-time lows. So let's consider the immediate swing high and swing low which we had, and see the opportunities we could have gotten. So in this case, we said, if you want to identify a swing high and a swing low, you want to see where the price creates a lower high. So in this case, let's mark the highs along this downtrend. What do I use? Let me use the shapes still. So we have a high point here. The price went lower. I don't know whether you can see that level. Let me zoom a little bit. That's a high. The price went lower, pulled back again, and we have another lower high. For the guys who consider SMC, we have what do we call it? Change of character here, because we have the price, it pushed lower, went up, broke that level again. That's a change of character. But then look, let's consider a swing low at this level. A swing low is where you want to see again two levels or two lows which are showing higher low. Like in this case, where could we have seen higher low? So it might be tricky a little bit, but you want to consider higher low. In this case, we're looking for an entry opportunity for a downside. So On our low point, what do we get? Let me use this one, sir. We had a low point here. All right. The next low point is just along that level. If that one is not, if it doesn't actually give you higher lows, then you might want to consider an idea, consider a situation where it has broken the high, right? If it has not, then we still have to wait for that to happen. So in this case, we're having a consolidation, but still this is a low point. It's a support level, so to say, because price has not been able to break this area, right? It has not been able to break this area. So what we can consider here is all the way from the top all the way to the bottom, and we are on 1 hour. So we have this high point, our swing high, down here, our swing low. Let's trade the Fibonacci from the top to the bottom, because if it's a downtrend, you want to start your Fibonacci from the top to the bottom. So I will trade from top there all the way down to that level. And there's another question which might arise. Should you use the wicks? Should you use the close of the candle? I think it's much better to use the close of the candles. And if it's difficult to get the close of the candles, go to the line chart, get the line chart. They very well show you the levels, right? So here, from that point to the upside, that's what we have. We go back to the candlesticks. We are on 1 hour. Now, let me highlight the levels which you might be looking for. We are probably looking for, so let me look at the shapes. So we're looking for those zones in between that 8.2 or 50%, okay, for a proper confirmation to the downside. There's a point on the chart where I talked about shallow pullback and deep pullback. That 8.2 is a shallow pullback, yes. And if you get anything that's not even touching that 8.2%, then that's something you might want to ignore a little bit up until you get a pullback to that 8 all the way to 140, right? And if it goes beyond 78.6, then might be a little bit tricky as well. Maybe a very deep pullback, almost about to break the trend. So what we have on the chart, the price is just in type of a range, kind of a range. It's not really reaching out that 8.2. For the guys who consider SMC, ICT, you see here we have some form of what we have here, imbalance, yeah, or you can call it inefficiency, you can call it a gap. This sort of a gap here. And if you consider another concept where we talk about support and resistance, if you kind of look towards the left, what you see is a support level. And this support level, remember, support levels can turn to be resistant. Okay, so this support level has not been tapped. If it is tapped, it means that that's when you're going to get the price filling this gap here. If you want to consider that concept, which is still a valid one if you're trading. But back to our levels, in this way, we are looking for confluence. Confluence is where you have different concepts all pointing to one section, right? For the guys who look for order blocks, although we're on 1 hour and 1 hour order blocks, might work, might not work. We have an order block right above this point here. So I just want to show you that the Fibonacci can help you even with other concepts, even if you're using SMC or trends or support resistance. So we have the last green candle before this strong downward move. Still, someone might be considering, there are traders who might be considering this close, which turned to an open for the next one, 1918 level, right? After close of this gap, still support resistance, whichever concept. But in this case, we are looking at the level between 61.8, 50% at 8.2. That's what we have there. So we want to wait up until the price reaches this level. And let me point out something again. This EMA 100, the price has not really touched that point. And you might also want to consider that at the point where it's coming to test this moving average at that level, then that's when it will have filled this gap. It's coming to this order block. It's coming to this support to turn it to resistance, all those type of things. And when you go back to the Fibonacci, then that's where it is coming all the way to the zone of 38.2, 50%, 61.8. 61.8 is a golden Fibonacci ratio. 50% is the halfway. For the people who consider, what do we call them? Discount premium zones, again, the Fibonacci will show you above 50, but we're not looking at that. Just want to show you how Fibonacci cuts across all these concepts. Now, back to our idea. We want to wait for the price to pull back above 38.2 to this level. And if it falls back below this level, then we're going to look for a short position to the downside, targeting the long here, the low of this point. And that is how you can use this Fibonacci for this gold for a possible entry. If it doesn't, if it ignores that 8.2, moves above 50, then you want to wait up until it pulls back below 50, right? If it goes and hits above 61.8, which is a golden Fibonacci ratio, right? You might want to wait for it to pull back again below 50. If this one occurs, if the pullback occurs in between any of these levels, wait for it to fall back below the next one, below the one which is lower. That's how you want to get your confirmations. Remember, I said you want to combine this one with other approaches which you use, be it order blocks, SMC, support resistance levels, trend lines, then this is something you can consider. So that is that for a downtrend. We can backtest on previous market formations and see whether it could have given us some trades. So this is an example for a down one move or a downtrend. All right. And this is something that you can wait for if you trade gold. We can see whether that one will work. Remember, there's no one strategy which is 100% assured. Maybe you can consider something else for an example, and just randomly we test. Let's do a back testing on anything. AUDJPY, for example. Okay, let's take something like anything. Pound USD, Pound New Zealand, maybe. Open chart. We can just color on white. All right, this is what we have. So what is the trend? What can we see here? What is the trend? If you go back in time, is an uptrend, right? Just looking at the charts this way, on 4 hours, this is an uptrend, all right? So in this case, let's consider a swing high and a swing low. If, for example, we want to look at this small downtrend here, then it means we're going to look for short positions, all right? But we're going to consider the downtrend which is here, this one that we have here. Or if you consider the long-term trend, which is the uptrend, still we're going to look for possible buys. In this case, you're on 4 hours. Let's look at whether we can use this example here for a down one move. We don't want to go so much far back in time, but that's a downtrend. Okay. So for a downtrend, we're likely to find the price moving to the downside. Yes. Right. So to identify a swing high, we want to see the price breaking to the downside. Here we have a swing high, right? Down here, this one confirms a swing low as well, but price went lower again. But we have a support level at this point. So we have a swing high at this level. Let me mark it. This level here, you have a high where you had the price breaking to the downside, moving lower. So a swing high is here. You have 2 touches, the price went to the downside. On the lower side, again, we have not had the price showing signs of really advancing this pullback to the upside. That might be the only thing that might not work in this case. But we want to look at this clearly and see there was a little bit of a break to the upside. Yeah, for the people who consider SMC and all that, you can see the price attempted to go to the upside, So if you have a line, you can see at this point here, price has attempted to go to the upside, and this is a support level. Now, we can consider this level as our swing low. So it's not advancing to the upside, but let's say it's a swing low. You need to go take the Fibonacci, pull it from the upside to the downside up to that level. And what you see is actually there's a point where it touched that 8.2. If I zoom, there's a point where it touched that 8.2 and went to the downside. But it has not been able to break this level to the downside, right? So if it advances back to this level, if this resistance level here or this range which you have here is broken, then we might be considering that one as a pullback to around these levels of what is it? 61.8, 38.2, 50, 61.8, and then a continuation to the downside along this downtrend which is happening, right? That's a possibility. So you can confirm that trade that to end. For the guys who use SMC, and you can see here we have a gap, right? So maybe in the future, that is some motivation for the price to pull back all the way here. For the ones who look for order blocks, maybe you have an order block here, and we have a close which turned into an open around this area. So what if? Okay, so even if you're using SMC, Fibonacci retracement might be a tool you want to consider. And at this point, it's also where you have the golden Fibonacci ratio. The only thing is that the only thing that might keep us waiting is because still the price is not pulling up a strong, it's not giving us a strong pullback to the upside, but that's the levels we want to consider, right? An example for a downtrend is here. This is 4 hours. Maybe the question might be, does it have to be 4 hours? Does it have to be 1 hour? You can apply this one on the time frame you like. But the thing is, if it's a lower time frame, then of course your confirmations show up and the movement gets done within a very short time. If it's a long, if it's a higher time frame, for example, here in 1 hour, in 4 hours, it might take several days, maybe 1 day to reach to your levels and confirm. But then once it confirms, you can imagine riding a nice entry to the downward all the way to, this is 1,000 pips. That might be very interesting. Okay, so that's that. Any questions from the chat? I don't see anything. I presume it's because it's very clear. Yeah, I don't know whether we can check another example, maybe for an upward move, but with something different. Let's go on GJ, pound yen. Oh, this is crazy. Let me just open something different here. Sorry about that. GBPJPY or something different. Anyway, that's really very clumsy. Sorry about that. Oh yeah, we have Euro USD here. So Euro USD, we on 1 hour. How can we apply it here if we were to trade? Again, what is the trend? It's a downtrend. You can go to 4 hours again. You can see we are on a downtrend. Maybe you can use these 4 hours to look for a possible entry. And this is really interesting. Why? The trend is very clear. It's a downtrend. You can see that the moving average is confirming. So looking for shorts, right? Trades to sell. Now, we don't want to go all the way back in history. We just want to consider the swing which we have here. And our swing, our trend which we have is this swing high. You can see it's created one high point. Then we have a lower high down here. This is what we have. And actually fell within the trend. It's moving downwards. Broke this low level. Then on the downside, now this is a very good example because we can confirm a swing high and a swing low. A swing low is here, and a higher low, and it actually looks like it's pulling back to the upside. So the level which we have, or the trend which we have, is this one all the way down here, and we want to go and fetch our Fibonacci, pull it from the top, all the way down here, and look at the possibilities we have. This a point in time I talked about these Fibonacci's confirming the support or resistance, and I want to draw your attention to this level, which was already drawn because this was a support level, and price broke the downside. Look at how it's it's aligning this level that I've marked in green. It's aligning with 38.2%. Quite interesting, yeah. But it's still, we have a shallow pullback. Look at the moving average where the price tests and pulls back. If it was to follow this one, it's just around there. So we might want to wait for the pullback. According to this concept, you want to wait for the pullback to above 38.2. If it drops the downside, you want to catch some sales, target the lows. If it pulls back all the way to the 50%, then that's okay. And again, let me draw the attention of the guys who trade the FVGs, fair value gaps. You have a liquidity at some point here which can be swept, and then just above this liquidity, we have a gap here, and see this gap is aligning well with 50%. And just above it, if you're looking for order blocks, there's one which looks like it's lying above 61.8. So if you are looking for a pullback all the way to the order block to come and fill this gap all the way to an order block around this area, okay, or maybe this high. Remember, if the order block is not taken at this point, it can go to the resistance level, okay, and then you have pullback to the downside. It's something you can consider for your entries. And that's the example, the last example I want to use to conclude this session. I have a question. Hey, Meshach, you're asking whether we have personal training at a constant place. Yes, of course. I am speaking with you right from our office in our academy in Nakuru, right, Tower 1, third floor. But you can as well find us in Nairobi at Westlands, Delta Corner Towers, 12th floor. If you're in Eldoret, we are at Rupa Mall, 3rd floor as well. Maisha Heights in Thika, it's a 3rd floor as well. In Eastleigh, we are at Al Mukarram building, 4th floor. I think that's the only we have on 4th floor, right? And then in Kitengela, 3rd floor, Kitengela Mall. So yes, you can get these trainings one-on-one. We discuss on these things, how to draw them, even on your phone, right? On your MT5 on the phone, or even on your chart, on your PC, right? So yes, Meshach, you're welcome to come. You're welcome to our trainings, yeah. We learn about this. Any other question? Anyone has a question? Thank you so much for attending. Anyone with a question? How much for training? We do not charge you for the training, Meshach. Good question. We don't charge you to get the training, right? Absolutely free. Because of course, we know we'll train you. You learn how to trade, and you go to trade with us. Hey, it's Gatwiri. How are you? Best? Thank you so much for attending our sessions as well. And hope you've learned something. Any other question? Best source for news. There are several economic calendars. You can find economic calendar on our website as well, but let me just, okay, go search for Forex Factor economic calendar. You can also check on the FX Street, but we also have economic calendar on our website, right? Go to FX Pesa Portal, you can find the economic calendar. Any more questions? We have a few minutes. We've been live for around 37 minutes. Can get a few questions. So Meshach, you won't be linked with the Eldoret Center. No worries. Just visit our office. We have account manager there. We have our dear trainer there. We have Jared and our trainer. His name is is Mzera, Sam Mzera, to train you. So just visit Rupa Mall, that floor, you find Sam, and you find Jared. They will help you very well learn these markets. Brand name, it's just FX Pesa. FX Pesa. Any other question? Can we call it a session? All right. We have all these that we've discussed today recorded, and of course on YouTube. If you want to review them, feel free to get back again and review it, and keep getting better. All the best. See you next time. Bye.